So without further ado, let's take care of the legal mumbo jumbo real quick here. Just want to make sure that everyone in attendance, whether it's this webinar or any of the webinars that we host, we present this information to everyone for educational purposes only. So please don't take it as investment advice. If you do need investment advice, what you want to do is seek out a registered investment advisor or a licensed broker, somebody that can help you out with that that's licensed. All righty. Before we get on to the content today, I want to take just a brief moment for those who might be brand new, sitting in for the first time, to let everybody know about the community that we've constructed around our technology. Of course, today's office hours with myself and Steve Gomez, but it all kind of starts off with the live trading room that's hosted by Barry Anderson every day. He opens it up about 30 minutes before the market and goes all day. Trades live and shares his techniques and shows you how he uses TI technology to generate his trades. Great place to learn. Nice part about the trading room is it's free. It costs you nothing. And that even, that holds true even if you're not a subscriber. You don't even have to be a subscriber to get in there, see what's going on and participate. So if you haven't been taking advantage of that, by all means get in there and see what all the hoopla is about. Tuesdays, my good friend Steve takes over the helm for the Trade of the Week webinar. Andy Lindloff rides shotgun with him. Middle of the week, hump day. I like to bring in a different crew, and that crew consists of Dan Merkin, the CEO, and Brad Williams, our CTO. Always interesting to hear from those two. Of course, on the 1 hour webinars, we round out that part of the schedule on Thursdays. Andy's trading studio. Andy always shares some valuable info, and I ride shotgun with him. And then on Fridays, we do something completely different and just have our support session starting at 11 a.m. Eastern, going until, can go until 2 if we have a big enough crowd. It's been doing that lately. It's a 3 hour, just come one, come all, anything TI related. I say anything, almost anything when you get into advanced things like Brokerage Plus. Maybe not that, but that will be coming down the pipeline as we get that product out of beta testing. What's not on the list here, we've also started TI University. That's going to start at 12 p.m. Eastern and go to 1:30 Eastern every Monday through Thursday. So Monday we start off with Beginners 101, and the skill level increases progressively up until Thursday when we do the advanced classes. So total of 9 webinars a week, I guess we're putting on now. So lots of learning to be done, and not having to wait to get in there and get your questions answered is the really good part. Now, one more little thing here. We composed a trading book, myself, Steve, Andy, and Sean, not too long ago. You can download it free right here. It's about what to do when buy the dip stops working. Of course, we've already been through that. Little nice timing there on the release of the book. So if you haven't downloaded that, we've been getting a lot of good feedback from it. A lot of thank yous from people who weren't really dabbling in the short side, but have now kind of had their eyes opened to that style of trading. So it's definitely something you want to get into the practice of doing and getting comfortable with it. When the market does change, it's not a matter of if, it's just a matter of when. These things are cycles. So if you haven't done so already, hop on over to that address, trade-ideas.com/ebook, and download that little guy. We think you'll like it. Okay, now let's get into what we're going to talk about today. As always, Steve's going to lead us off here, talk about the market, what's been happening. Steve, if you're ready, here it goes.
Oh, sure.
You got it.
All right, I caught it. All right, guys, so welcome to my screen. This is the SPY, which is the ETF, of course, of the S&P 500, which many people consider the benchmark against all other indexes. So I always like to start with the SPY, and I have a few observations here. This declining trend line, the declining short-term trend line is the word I'm looking for, is still in play. But there's two other elements in play that are as well. There's this, blue line declining 50 moving average. We had a very hard time once again getting above and closing above it. We pierced above it, but could not close above it. But in my book, this orange line here has been here for a couple weeks now. I've been, calling this the pivot line. It goes all the way back to the breakout here in the S&P. It showed some support on these couple days, and then it became resistance here, and then it broke through and became support, and then it broke back down, became resistance again, here, here, and here, and here. And I'm going to say today, here yet again. So we're back below the interesting pivot line that I've kind of identified. And what's unique, guys, is it's marrying perfectly up to that blue moving average. So the 50-period moving average has been giving the S&P some fits. Additionally, the pivot line. And today, as you can see with that candle, we have ourselves a perfect doji. Market opened up, threw some elbows to the left, threw some elbows to the right, and closed exactly where it opened, meaning there was no winner today, just a bunch of noise. And just a bunch of noise right up underneath these major resistance levels is not helping. I'm not saying it's going to predict anything. I'm just saying we ended today with no resolution, tucked up right underneath these major levels. Here's what the bulls need, guys. The bulls need a close either up in this area and then a further push through this declining little trend line there. They can get something going up here and break that trend line and close above the 50 and this pivot line and move out of this range. That's what the bulls are going to want to see, and that could very well portend future higher prices. Otherwise, to the downside, you can see it's the 200-day moving average that this market, the S&Ps, just keep banging on. And if they roll back over and attempt to bang on them again, at some point, the triple and quadruple testing of that level, just might break the ice. So it's kind of neutral. We're back in no man's land, in between the wedge of the 200 and the declining, the declining trend line, and pinned under this moving average and pivot point. So, the spiders still have a lot. The spiders still have a lot of work to do, in my opinion, before we really try and call a direction, because we are just languishing here in no man's land for sure. The Qs, on the other hand, are a little stronger, all right? I drew these lines last week and showed you possible head and shoulders type action, which usually shows up after a big run. But the problem is this high back here was my right shoulder. And now the price has bounced back up. The price has moved and closed for a second day in a row above its 50-day moving average, but it got stymied and hit the ceiling of the supply right here, this orange line, right around 166.90, which I've had as a pivot line going back as well. So, these weren't lines I just drew in today. They're lines I've been watching. But the point is, on the Qs, they're a little bit closer to trying to define a resolution of direction. Because if we can get back and close above this pivot line and ideally above this right-handed shoulder here, well, then I'll go ahead and delete, these head and shoulder possible markers and say that we may have resolved that and worked through that. But that's what the bulls are going to want to see to really try and resolve and get this QQQ head and shoulders look turned out. And to do that, we're going to need a couple more days of closure at some higher prices. We shall see, but the tech leaders are trying. The IWM, real quickly, the Russell 2000 is also very healthy. It's the healthiest of all four, as a matter of fact. And the only reason I say that is because we've, got close above the 50, 20, and 10 moving average, and a close above the pivot that I've been using in the IWM here. So a really nice close here, and maybe the small caps might turn into some leadership, and maybe the market takes notice. But keep an eye tomorrow and the next day on IWM, because this one is holding up the best, whereas the S&P 500 is really remaining stymied under these pivot levels and moving averages. And remember, the S&P 500 is the bellwether index, much more well-known than the Russell 2000 would be. And lastly, on the index front, the diamonds had also kind of a declining near-term downtrend line, but they've been kind of snaking back and forth through it the last few days. And the only thing of note that I'm looking at is the same thing. This Dow has been banging on the 200-day a few times over the last month and a half, but at the upside, it can't quite get above its declining 50-day moving average. So I'm going to put this line in here as we speak. I think if the diamonds and the Dow can get back a close above this 50-day moving average, and even more so, maybe a close right up here above this most recent lower high, then we can have a definitive conclusion that we might be breaking this little midterm downtrend line, and the 200 may in fact have held. But that's all conjecture, because right now we're again painting ourselves into a corner here with the 200-day coming up to support the bounce, and the 50-day kind of keeping price a lid on price action there, and that's in the Dow. So that's my observations there on what's going on in the general markets. It's still too early to kind of call a direction. We've been, back and forth in no man's land and super volatility land for many, many weeks now. And you guys are probably noticing in your trading styles that the volatility means that your normal share size moves around a lot quicker or faster than your normal share size would have been over here on the other side of the mountain where the sunny side was before we broke. So you can combat that by just downsizing a little bit. If you're normally trading 500,000 shares, maybe consider 300 and let the volatility, do the work for you and give you a little bit more room to throw elbows, or let the market throw elbows at you. But until we resolve this volatility and resolve this painting into the corner, which pretty much all 4 indices and ETFs are doing, they're painting themselves into a corner. Some are looking a little stronger than others. Some are still in their no man's land, being held down by their pivots, much like the main S&P 500 here. So maybe this week we will get a little bit of resolution, and we can stop talking about, the moving average and the pivot lines holding the price down. If you're a bull, maybe we can, move through there. One last item of interest, it's not really showing up on the ETFs here. I don't have a lot of great examples, but you may have noticed some of the stocks that you guys follow out there, if they're reporting earnings, a lot of the earnings have been pretty decent numbers. However, it's not about the numbers they report, it's all about the reaction that the market gives. And what we're seeing right now is stocks really seem to be priced to perfection. What that means is earnings can come out and have pretty good earnings and beat across the board, but coming into earnings, those were already priced in. So what you're kind of seeing is some sell the news in a lot of these nice earnings reports, which isn't really a plus for the bulls, but I just wanted to make a note of that, to put that on maybe the contrarian side of things turning bullish again. Keep an eye on earnings, and the good earnings especially, and how the market reacts to them, because I'm sure you all have seen probably a few examples out there of what you thought good earnings, but the market reaction was completely the opposite, and that's really all we care about. So that's my sermon there on the market general stuff today. That's it, unless you got anything to add, Jamie.
No, and to your point, Andy did a pretty good job Thursday. He kind of listed all the 4 different scenarios, earnings and good reaction, earnings, meager reaction, negative reaction. So yeah, we're seeing exactly what you said there. Good earnings, but not so.
And not exactly one for the plus column for the bulls. You'd like to see good earnings met with good reaction, which means there could be more fuel in the market. But when you see the opposite, you start to put the contrarian hat on a little bit. But we're going to wait for the technicals to show us what this market wants to do. Any break and close below the 200-day moving averages there in the S&P and the Dow, that's not going to be good for the bulls.
Yes, indeed. I concur, Doctor. So.
Think so, Doctor.
Let me grab it here and back to my desktop.
All right, I see it. I hear you.
Perfect. Now let's see here, hiding from me. All right. Let's talk about expectations for just a second here, because boy, we had some pretty good indicators that it was going to be a day like this where, Steve said just a bunch of throwing elbows up to highs, back down to lows. But after the first 15 minutes, if you're following this methodology, you had some pretty good ideas that, it's going to be one of those days. In other words, the old worn out phrase that I just use over and over, there were cookies. But if you didn't take a few the first go round, boom, crumbs, maybe not even crumbs the next time the plate came around. They got depleted quickly. And of course, not saying that this is a magic crystal ball, this methodology, but surprising how many times it gives us or helps us temper our expectations. So first and foremost, let's just take a gander back at the SPY. Now, what do we have coming in? And let me get rid of the pre-market color there. So close for Friday. What do we have? A nice gap up greeting us into the day. Now we'll look at the compare count readings that I follow. and take a look at 15 minutes in to help temper expectations. So coming in, we have a gap. We know that that always throws a little bit more difficulty into the day. Of course, whether you're a gap trader or not, doesn't really matter. We can always see from our AI that a lot of the times when a gap is there, it's a little bit harder for her to find opportunity. Now, not only did we have the gap, what kind of action did we have in the first 15 minutes here? Let's put a line here, the initial low, and then boom, within 15 minutes, we were pretty much at highs, just barely shy of highs. Okay, so 15 minutes right here, these are 5-minute candles. So anytime we have wide range in the first 15 minutes, that also throws another layer of difficulty into our expectations process. So not only do we have a gap up, we have a run up after the gap up. And what I typically say about these types of openings is it throws everything off. So if I pull my compare count readings over here, it was no big surprise to see that the big caps were showing that 65% bias to the upside with accelerated volume after the first 15 minutes. But we have to take pause and go, okay, I remember now. Gap up, and then on top of that, we had this run up. So anytime we have a run up like this or a run down, then that throws a little bit of kryptonite around our Superman that is the compare count window. All right, we need smoother action. So right off the bat, we got the gap up, we got the run up, we know that it's going to skew this. So a little bit of our superpowers have been stripped from us. We're not seeing as clear as we would like to. And when we can't see as clear as we would like to, do we slam on the gas? No. It's like trying to drive in the rain with a worn out pair of windshield wipers. And everybody here knows exactly what I'm talking about. You let them stay on there 2-3 years, and then you need them, and it's like crack, 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 crack. It's doing a little bit, but it's almost like you have to bend down and pick a little slot to look through. In that condition, you're not going to slam on the gas. You're going to be extra cautious, right? And that's exactly what we were experiencing today. You know, the windshield wipers were a little bit broken today. We couldn't rely on them, and it was coming down pretty hard, the rain. So right off the bat, in the first 15 minutes, we've got all these things telling us, you know, not the most ideal conditions today. Of course, there's always opportunity, but to temper with expectations is always the first and foremost thing that we need to do. So moving into that, CC windows are noisy, and then we move on to see what happens with Holly. Now, of course, we can see she did finish positive. Risk off took the day, up 53 cents. Risk on, a little bit different, the exact opposite, not quite, a little bit worse, 53 versus a negative 69 cents here. Now, whether we're looking at risk off or risk on, we can see nice profitable position in both of these modes before we had the little downturn in the market or the gyrations followed by the little downturn that we had. But there was still some decent opportunity. Risk on got as high as almost $1.30 here. Risk off, a little bit less, maxed out at about just shy of $1.14. Now, additional expectations that I don't want to forget to cover here. Look at Holly's strategy count. 6 strategies. That's all that showed up today. Now we know that on the high side, she can have 14 and 15 strategies. I'd say on an average day, she's coming in with about anywhere between 9 to 12. So this is definitely on the low side. What can we extrapolate from that? Well, after the market closed on Friday, our AI in the lengthy session that it goes through said, you know what? The only opportunity I'm seeing for Monday are these 6 strategies. So we also have one more indicator here. Low strategy count from Holly, pure and simple, tells us that she is seeing less opportunity in the future trading sessions. And of course, there is a direct correlation between her performance and that low number count. Now, 7, 12, 17, and 19. probably slightly overtraded a little bit today, but that's the nature of the beast, right? Quite a few trades to end up basically just a little bit better than flat, but it's what happened in between the cracks here, right? Because we're looking back in time right now, but we're doing this in real time as it unfolds. So there was some pretty darn good opportunity, and of course, Holly was all long today. Not even one short fired out of these two that were present. So let's take a peek here. Now, what we're going to do is talk about the risk on opportunity that was present in these three stocks here. KPTI, number one. And by the way, all three of these, I believe, would have been rewarded today. So we get a nice signal from Holly right here. Right at, what time was that? About 23 minutes into the open, which, by the way, her first trade today, yeah, 15 minutes in is when she got active today. So going back to KPTI, nice signal right here with the blue line. If you might be seeing this for the very first time, when I double click off a symbol from Holly's blotter, all of this information is automatically populated on my charts over here on the right border. Obviously the blue line is the entry and the buy signal nestling right up there. Stop loss, profit target. Now of course on this one we get a nice push in the direction pretty quickly. And of course profit save kicked in. So we see Holly taking 25 cents here. Now this one worked on the risk on level. And of course, with Holly going risk off, what is that? It's just Holly obeying her trading rules, like me, you, any other trader would and should do. My stop loss gets hit, too bad. My profit target gets hit, great. Or my timed hold expires. We can see several occurrences of that today from Holly, timed exits. But this one was a profit save, which is one of the other two reasons why Holly can get out of the trade: profit save and reduce risk. So notice the dark shaded area on the chart corresponds with Holly's time in the trade in risk off mode. So we see Holly getting out here if we feel the chart is conducive. And by the way, this little flag action right here, not too bad once we get a little push up and a little sideways movement. And then we can see Holly gets out right here on profit save, locks in her 25 cents. And we're thinking at the time, okay, I see Holly's getting out. Maybe I think there's a little bit more in this. So we can choose to go risk on with the whole lot or half the lot. Me being a pragmatist, it's always a good idea to do a little bit of both, especially on a day like today. Now, number one, we already knew that it's going to be a slippery slope based on the expectations and the way that we kind of gear up for them with the compare counts. Did the market gap up? What did it do in the first 15 minutes? How many strategies did Holly show up with? So if we would have made the decision to go risk on this one, it would have worked. There just wasn't a whole lot of meat left on the bone, about 18 cents. And usually we see a lot bigger spreads in between risk off and risk on, but on this day, not so much, just due to the nature. So if we do the 50-50 game here, we peel out a half with Holly, book our 25 cents, keep the other one, but we adjust our stop loss to break even. Almost gets us out, but no dice. And you would have got to enjoy the move higher, which at the close we're showing 43 cents was a little bit higher, 17.53 versus 35. So even more opportunity there during the time that the market was open. So just a nice crisp example of going risk on a trade today and keeping your second lot and adjusting the stop loss to break even. If it would have stopped us out, we're not happy about that because we would have liked to make additional monies, but we still made money on the first lot. And as we see here, 20 versus 22 cents, you know, the name of the game is the same. Now this is showing us what the risk on is at the close, all right, 367, but that stock went as high as 383. So we can tack on just a little over another 15 cents as to the potential there. So instead of 22 cents up here, we could have been looking at 37, 36 cents versus 20 here. And the same methodology applies. Holly gets out right here. We think there's a little bit more left in there. Get out of half with Holly, put our stop back to break even, never even comes close. There was a little wiggle, little pullback, which is healthy, just like it did right here. And then we get a nice push to what was the high of the day. So a little bit more during the day than 22 cents here, since we're looking at the marked close right here. Let's see, what else we got here? CVTI. Very similar to what we just saw. Holly gets out here, then we get a push to here, pull back here, and then a push to what was the high of the day. 28.45, so we're looking at another 20 some odd cents there that was achievable during the day. Once again, getting close to that stop loss if we use break even for our second lot, but not really happening today. Now, due to the nature of the day, spreads are small and no big surprise there. So we took a look at some of the winners and the risk on. So let's look at risk off and some of the losers that she took today. ALTR takes a stab going long right here, just never really gains any traction. Almost stops us out immediately, but you know, makes us suffer just a little bit longer until the stop gets hit here. Turns out that one would have been a little bit better at the end of the day, but it's not a big surprise because of the whipsaw action that we had, which, you know, later in the day, here we are at highs, and then in a very short amount of time, we're down here at lows. We were all kind of chuckling about this because, you know, there was a little bit of volume explosion for a brief period on the smaller time frames, but, you know, we were all just kind of giggling, going, well, doesn't look like there's a lot of room here, you know, especially as Steve was pointing out, you know, sitting on that 200-day moving average, you know, like it was a nice fluffy love seat. Been defending it, and that's been propping it up. But
yeah, there wasn't a lot of volume in the indexes. I forgot to mention that and look at those
right.
relative volumes. But the SPY, diamonds, Qs, they were all well below normal volume today, sitting under major resistance.
And as Steve said, relative volume. Look how they finished. You know, earlier in the day, they were a lot more pathetic looking. But the trend lately has been low volume on the up days, and we see higher volumes on the down days. So as we, you know, push forward into this wedge further, we'll see what side wins the battle eventually. Other than that, not a whole lot to point out about what Holly did today. You know, her performance kind of jived perfectly with the expectations of where we are in the market and how all of our expectations that can form leading indicator, or indicators, I should say, played out. So on a kind of a boring day, I'm pretty pleased with what all of my things were telling me and the way that the day played out. So, you know, that's part of the market, and interacting with it on a daily basis might not have been the most active day, but the feeling of being in sync with the market carries a lot of weight, because the more you get into that mode and can repeat it, then it's going to have a direct performance on your overall trading performance. All right, so that's kind of it for Holly right now. We'll see what she shows up with tomorrow. Maybe more strategies. Maybe it's a long day. Maybe it's a down day. But we all have front row seats. So especially on days like today, you really have to fall back on the bread and butter and be very selective. Now, of course, we're always watching Holly, but even on a day like today, there were some really good setups that came through the high volume windows that I like to watch. Of course, not near as many as normal, but on a fickle day like today, there were some pretty clean setups, and that's really what it all boils down to. How clean is the setup, and is your risk in place? And are the favorite things that you like to look for in a pattern and a configuration? all firing at the same time. So we're going to talk about a few trades that came through the turbo up family no resistance, which is looking stocks hitting highs. Of course, they have to have accelerated 1 minute volume behind them. I'll give you a little peek at the configuration here. So we've got new high as the alert, and we've got a relatively simple filter configuration, opting for the market cap instead of average daily volume, with the assumption that if it's a $4 billion market cap, it's probably going to be pretty liquid. Some slide through every once in a while, but as soon as we see that illiquid chart, we say no thank you. Maybe you say thank you. Some people like those things, most people don't. Now the kicker here is it's got to have accelerated 1 minute volume, and then it also has to be at lifetime highs, giving us the added benefit of no resistance when we look to the left, which is no guarantee that it's going to go on a multiple day run. It's just a very nice characteristic to have in a long trade that is working for you. So what I've done is I've extracted these plays out of this window today and got them all queued up here so that in the standalone window, when I double click on pin, it's going to be coinciding with this area on the chart right here. So on these little setups right here, these bull flags or consolidations, whatever you like to call them, it's kind of a hybrid between the two. We can see nice little pullback, nice little snuggly action back up to the line here, and the plane is broken. Now, a lot of the times they'll be coinciding with that exact bar where the range is broken. Today it was a little bit more difficult. There were a lot of these patterns today, but the timing was not correct on the majority of them. Now, this one's conducive because, you know, we got the range break bar here. It didn't go too far, and then we have a little time right here with this little wick down right here, and that's when the volume really kicked in, and that's why the arrow is there. So, you know, just a very clean entry on the pin right here for a long. Whether we took it right here or even at the top of that candle, that's really not chasing. That's a nice clean break. And of course, we're always looking at the prior 15 minutes, and let me just expand this out a little bit so everybody doesn't have to squint too hard to see. But if the entry bar is here, and we look back and take the lowest point of the prior 15 minutes, you've got extremely small risk here. And of course, this one never even really looked back. Now, Steve, you know, what I found is the 10 period, whether it's the 15-minute candle or the 5, a lot of the times when that baby's in motion, we're going to see the same thing on the 5, and that's exactly what we saw in this one as well.
That is true.
And that is the 10-period simple moving average. Look how when the stock is in play, just really hugging that line. This one really never buckled and went below for the close. However, it's also a very good indicator when you might want to peel out of a trade. You know, when you start to see a close of whatever time frame you like below this bar, followed up by another one below it, a lot of the times that's when that momentum is coming out for the time being. So keep that in mind. Simple 10-period SMA. Of course, I learned about this from Steve, and it's a pretty good little indicator for the intraday period. And by the way, this alert window, along with all of my favorites, Steve's, Andy's, Sean's, all available in the handout panel. I did correct, Steve, my compare count family. It will no longer spawn the turbo up family. I guess I got the links mixed up, but I've since corrected that. So all of these windows are in the handout if you'd like to try them out.
All right, cool.
All right, so that was PIN. Another good one that was produced by this same ticker. Oh, and by the way, PIN, nice snuggly intraday, and we get nice liftoff here. Of course, let's take a peek. We can see that indeed PIN is pushing through all-time highs. We had a nice breakout on the daily, you know, about 4 days ago as it broke out of this area right here. This is another thing I'd like to point out, because a lot of the times the timing will be such, you'll see this signal present itself on the intraday with low risk and high volume. Makes for a good entry. It's moving up. Take a look over here. You notice that the exact same pattern has recently transpired on the daily. That's the cool thing about this, especially if you can catch them on these days on the intraday doing this when they're just starting to poke above there, you can get some nice runs like what this one is currently doing. It's what we call a fractal pattern. It can occur on any time frame. So you'll hear a lot of the more famous technical guys say, hey, when you get the same pattern to match up on multiple time frames, even better. So this is a real simple pattern that with a little practice you can start doing that. All right, same window produced. This guy right here. All right, we had a nice little run up, a little flattening out area. Of course, indicative of the day. Once again, we hit highs, we peel back. The pin kept on going, but it's the exception, not the norm. So once again, we get the break here. We've got a nice little tame area for the prior 15 minutes, and it's all about the risk versus the reward, and we're still maintaining some pretty good spread between these two. So ENTA, another one that when we look over here, we see more of the same type of action. No idea, I must have got a little zealous with the line drawing there. But once again, we can see that same fractal pattern displaying itself on the daily, and it just happened a few days ago. And we're getting more intraday buy signals when we can start coupling those with the same pattern on the daily. We can get some really interesting momentum going. So we had ENTA and PIN. There were a couple more that I'll point out here. CHGG. I'm sure this one was all over Andy's ticker as well. Now we got the upside push, but once again, didn't take the cookies, comes back down, flats us out. And by the way, we can we can engage in the same type of activity that Holly does when we get into things like this. Because once again, we look over here and we're going, well, it's doing that thing. It's also breaking out. There's no resistance to the left, but there's never a guarantee. So what's the best thing to do to help us keep our sanity while at the same time feeding demon A that sits on the right shoulder, feeding demon B, which resides on the left shoulder? You might know them as fear and greed. We all have it. And so the best way is to, once again, take a play from the page book known as Holly the AI. When you feel that momentum starting to die, or maybe you see the first red candle, peel out a half. Is that the second lot for a break-even stop loss? Now in this one, it would have got you, but that's okay because PIN would have kept you in, right? Now, big deal. So Chug did fall back over and got us out of that second lot, but we still made money on the first lot. So it's still a winning trade. And lastly, we had this guy doing the same song and dance. 5, 10, 15, 20 just happens to coincide nicely with a 30-minute opening range break as well. We got nice volume pumping through there at the time of the break. We look over here, we see this one busted out of his nest not too long ago. Kind of, took a little breather back here, showed us that, hey, this is now going to act as support, and then boom, a leg up, and then even a repeat of the pattern over a smaller amount of days. So this is a real simple methodology. And then once we can identify, it's just about managing the risk and managing the profit. So peel out of the first lot somewhere in here, keep the second, give it back to a break even, just like we do with Holly. We would add a little bit more on the table. So even on a day like today where the trades were fewer and further between, once again, if we're only pulling the trigger when the animal that we're hunting comes into the view scope, there are still good trades to be had. There's just going to be fewer of them. So if we're going to talk about upside, then I only feel it appropriate, especially with what we've seen going on in the market, to talk about being able to identify the downside. That's why I wanted to take a little bit of time earlier and talk about that book, because we've been getting a lot of good feedback from a lot of people that just aren't familiar with short selling. So now is the time to familiarize yourself with the short side trading, so that when that's what the market gravitates to, you're not learning then. So keep in mind, the same thing I've been showing you guys, the same chart pattern for stocks going up is applicable to stocks going down. Instead of up with no resistance, now we're going to be seeing, we've been seeing these, there just haven't been very many of them. But guess what? Slowly but surely, more and more are showing up. Good example would be this little guy today. Well, look what we have here. We've got a nice little consolidation area on the 5-minute. And then what happens later in the day? Well, it penetrates that area with volume coming through this ticker. And we can see when this break started to occur, not only was that 3x 1-minute volume metric satisfied, but it was hitting almost 10. And during this little area where it started really pushing through, 15, 16, 17 times normal 1-minute volume. Now, that's really telling you, hey, this car you're about to jump in and slam on the gas, it's got gas and the tank is full, right? So it really might carry us for a little bit. Now, this is today, but look what happened not too long ago. And by the way, I've got my chart compressed all the way, so this stock must be a baby, meaning it just probably hit the market, came public back here. But we can see it's that same song and dance. Why am I using this pattern? Because it's very simple. Doesn't mean it's simple to execute, but when we're looking at these patterns, there's nothing more simple than a range break on any time frame. So we can see here, it's the same thing. Could have easily cut it on this day if the volume was there, right? So if we see this pattern, if we were short today, because we're in at a safe spot, we know that our risk is limited to the, if it goes against us based on this little tight range here. So even though we're seeing this, flip it over, it's exactly what we were looking at to the long side. There's nothing over here to catch it. Where's the safety net? This is a trapeze artist doing his thing with no net when you see these guys doing this. So the potential for downside draw is great because there's nothing for it to snuggle up against. So you're going to start to see more and more of these guys as the days progress, assuming we don't push back and hit all-time highs in the market, which, hey, at this point in time, it's anybody's game, anybody's guess. But if I were you, and I have not been trying to identify good short setups, you don't have to start hitting them yet. Just start identifying them. Our RD was coming through again. It never really set up nicely. If we played this break right here, we would have got snapped out of it. Interesting thing, when I pull it up, Holly had gotten short in it a few days back, and it's starting to come down, which is another thing to point out. Every day, at the end of the day, when the market closes and you're doing your post-market routine, very good idea to look at all of the stocks that Holly produced and see if you see anything interesting on the daily. Because guess what? This guy might stabilize a little bit moving forward and take another run at that all-time low, right? Or it might stabilize for a long time and just act like it's not going down anymore. But, whichever way it chose to go after we have these little consolidation levels, it's making for a real nice idea of where your risk is. And of course, even better than that, we're going to tell you exactly where it is, because there's the smart stop, there's the swing exit, there's the profit target. So keep that in mind. Even if you pull up a stock at random, here it is. Everything's right here. So if you hit that trade, you know where your stop loss is and you know where your profit target is. Which, Steve, I was thinking about this. Holly identifies whether it's short or long, so the chart adjusts. But in the future, let's say I pull up forward and I'm using the smart layers.
Yeah.
Well, then I'm just going to have to flip these around and go, this is my stop loss, this is my profit target, right?
Unless there's some sort of a command we can develop and code into clicking a toggle.
Yeah.
The long gradient and the short gradient, that's something we should talk about.
True. Things for future development. Okay, so hopefully what I'm showing you guys here is making sense. Start watching setups to the downside. That way, when it comes time to actually do it, you're already comfortable with it. You don't have to learn about it. You don't have to kind of retrain your eyes to see the inverse chart. It all becomes second nature. As Steve likes to say, chance favors the prepared mind.
Correct.
And I do believe, ladies and gentlemen, that we're just about at the end. We've got probably about 5 minutes here. So I tell you what, first 3 to 5 people to type in a chart, we'll get that chart looked at.
It helps to know if you're long or short or in or out or thinking or...
True. All right. Christopher wants to take a peek at CLDR.
Right, so that's kind of your vacuum cleaner setup there. Very trend change, lubricant type setup on the top list. That's the kind of stuff that would spit out. What is the short interest? The short interest is only 6%, so we don't have too much of an opportunity for a short squeeze. But, you know, I think your downside, your bogey, is going to be right there. Just, you know, the highs of last week, 1522, call it. So, you know, you could try and keep it really tight, maybe nothing below 1518. And if that's the case and the market's conducive, you know, that gap on that daily chart that you're referencing, you know, can start to act as like a vacuum cleaner and pull the price up. Always helps if there's more short float, but 6% isn't quite that much. So it'd have to be a technical move on its own. Earnings are not for 23 days, so no threat there. Doesn't look bad. I think you can define a pretty tight out just below those highs of Friday and going back 2 weeks ago. Yeah, kind of where that orange line is exactly.
Mm-hmm. Yep. Okay, KSS.
Let's see.
Possible long is what John is referencing there.
Well, it's really in a no man's land, long, protracted 4-month range. Earnings are still 11 days away. Short float's 19%. You know, you'd be guessing. I think in the long run, you'd be guessing to go long here, and you'd be guessing to go short here because it's just kind of in that range. It's very obvious, or it's very possible. Not obvious, I shouldn't say that, but it's very possible that the people that were trying to buy those highs peaking above, you know, last week, they're getting punished today. I'll talk a little bit more about that price action tomorrow on the Trade of the Week webinar, because the last 2 Trade of the Weeks before this one have been rather punishing. And so, you know, what I'm getting at here is there's a possibility you could play off the pain of all the people who waited to buy until last week and just got hammered hard today. You know, maybe watch tomorrow if it puts in like an early morning low and then pops back up. Well, that early morning low could possibly be, you know, an out for you. You know, it's much easier when you can get the right entry using a pullback on somebody else's pain. We used to call that in the office all the time. Oh, you're buying the stock now after I'm getting killed in it? I see what you're doing. You're playing off my pain. Well, I'd probably do the same thing. So that's really the only thing I see here is, you know, playing off of the pain of the people that tried to buy last week. But, you know, technically speaking, this is a long, protracted 4 to 5 month range, and the price is just right smack in the middle of that range.
Yep. Retail's a fickle beast as well.
We were just discussing that this morning too. Retail has its moments, and then they just die on the vine.
Yeah, you got Kohl's doing that, and then you have the darling Lulu taking its beating the other day and flattening out. But, you know, retail, what are you going to do? All right, gentlemen, I don't see any other chart requests. So if nobody has a chart, then I think it's time to cue the exit music and let Scott tell everyone how they can save a little bit of do-re-mi whether you're going to be a first-time subscriber or simply upgrading to the premium package.
Yeah,
So Scott,
good. Thank you, everyone. Oh, everyone should make sure we're subscribed to the podcast. So whatever you use to listen to podcasts in, go to that app and search for Trade Ideas Podcast and subscribe to us. We had a new episode up on Friday. We'll have another one out this week. As soon as you subscribe, you can download the newest episode and then stay tuned. We have a code. If you want to save this month, use Holly May, all caps like you see on your screen. You can also download a handout that has this code and some other information by expanding the handouts panel on your GoToWebinar interface and clicking on office hours codes for May 2018. It's also got some contact information for your hosts. Just email info@trade-ideas.com if you have any questions. You can also reach out directly to Jamie or Steve, jhodge@ or steve@. Go to facebook.com/tradeideiaspro. Find us on Facebook, like our page, then you can share everything we post with all your friends. And you can find Jamie on Twitter @QuantBot. Steve is Today Trader on Twitter. Dan Merkin's Trade Ideas 1. We have some other handles out there too, like Trade Ideas and more. We have the recording of this up later on tonight or tomorrow morning, so stay tuned for that. You'll get an email reminder tomorrow about how to find it. Thank you, Jamie. Thank you, Steve. Enjoy the rest of your day.
All right, see you tomorrow.
Thank you very much. Thanks everybody for coming to hear us, and we'll see you tomorrow. Bye-bye.